Third quarter sales for Heineken may have fallen a little flat, but the company still had reason to cheer during the period as it won an ongoing battle for control of the growing Asian market. Delighted to welcome around the desk Alexis Nasard, who is the Chief Commercial Officer of Heineken. We've still got Virginie Maisonneuve with us and Simon Morn to discuss as well. So just first of all, before we talk about other issues, the most recent figures as well just underlined what we were talking about at the wall just now, i.e. the growth area of Asia still remains very exciting, albeit expensive to make acquisitions. The US is picking up, but Europe remains awful and is dominating still?
Sorry?
Well, is the European negativity dominating the positive stories, or actually is it being negated successfully by your growth areas?
We are determined to win in both the developed and the developing world. That includes Asia, the Americas, Africa, Middle East, and Europe. The nature of the challenge, though, in all these geographies is different. The way we're going to win in Europe is going to be different from the way we're going to win in Asia or in Africa and Middle East.
How are you going to win in Europe?
We're going to have profound and very relevant brand offerings. For example, the premium segment in Europe is doing very well, and brand Heineken, actually premium, is growing in Europe. We actually also have other brands which are very relevant, like Desperados, which is also growing in Europe. We also have to work together with other brewers to develop positive stories of beer to generate the regrowth of the category.
So, very briefly, why do you have to work with other brewers if your brand offering is strong enough?
Well, because we also need to regrow the category. The category in Europe is not growing, and ultimately, for the long term, you want a healthy and dynamic category for everybody to compete in.
With all due respect, I like my beer, and I've drunk my fair share over the years, albeit I don't drink lager anymore, but there's nothing healthy about beer, is there?
There is everything which is healthy about beer. Beer is much less calories than many things you can think about.
Do you know what, Alexis, I beg to differ. On many a Saturday morning I've thought to myself, why?
Beer already has less calories than a glass of milk. That's probably one thing you didn't know.
Right.
The other
so
thing...
I should give my 3-year-old daughter beer then.
I wouldn't go that far. The other thing also is that beer is one of the few drinks which actually is purely natural. It's water, hops, barley and yeast, which is quite healthy.
You're reminding me, Alexis, of those wonderful 1960s Guinness adverts. Guinness is good for you. All these pregnant mothers queuing up to take their intake of iron, which I think might have just been a marketing coup rather than anything else. Karen, come in.
You've got to work a little bit harder to convince the female drinker, I think, because we also don't, a lot of us don't drink milk, so they're not going to drink beer either. But you did actually make a strong pitch recently with this product placement in the new James Bond film.
Yeah.
How important is something like that? I'm sure it costs a fair bit of money, and perhaps you can tell us how much. But
I figured you would ask.
How much did it cost?
It doesn't matter so much at this stage. It's the most important thing is that this partnership is really valuable for both brands. Heineken and James Bond are old franchises, but remain very much actual, relevant, dynamic and cool. So we believe that association of Heineken with James Bond will benefit Heineken, because my Heineken's positioning is to be a man of the world, and James Bond is the quintessential man of the world, and it's a universal value because in every man lies a little James Bond. On the other hand, Heineken brings dynamism.
It's very dangerous for Steve. I don't want to mistake for Daniel Craig, but if he's holding a beer, it's fine. You know, martini might have been a bit of a stretch, but a beer, big trouble. So you were saying?
Yeah. So we believe that that James Bond brings a lot to the Heineken brand, but also the Heineken brand brings global reach, dynamism, and modernity, and keeps the franchise, happening, preppy, and up to date.
On a slightly less happy note, sorry about that, but I'd like to talk about Russia.
Yeah.
Putin has just announced some pretty drastic measures for Russia against alcoholism. As we know, half a liter of vodka there is $1. 900,000 people a year die of alcoholism. I think it's a cost of 5% of GDP, and life expectancy is actually very short in Russia versus other countries.
Right.
What does that mean for a company like you in terms of, adjusting, thinking about sales? It's a very large alcohol market. I think it's the 4th largest in the world or something. How do you think about those measures?
It goes without saying that Russia is quite a difficult market to operate in today's environment, so that's a reality. The good news, though, is that there are two good news here. We are not as exposed to Russia as some of our competitors. That's the one thing. And the second thing is that the strategy we chose to follow is a premium strategy, and we've been very successful in that strategy. So we have today, actually, we're growing share, and the other thing is that brand Heineken is actually growing in excess of 20% 50% versus last year. So our brands are resonating with Russian consumers, and massive gain in market share should offset that.
Let me just delve a little bit further into the marketing strategy, because you guys seem to be one of the first movers into emerging markets, and I just wonder whether there is a bit of brand fatigue because you got there so early. There's a lot of new brands coming in now that people sort of look at as premium brands and as more exciting. You must be facing the need to refresh the brand in these markets.
It's an excellent question. You know, oftentimes when I give training classes, people say, how do you keep a brand actual? How do you keep it cool? The recipe is actually quite simple. You want to be consistent, but you want to be surprising. Every once in a while, what we try to do is to come with surprising messages that gets people a little bit, what are they doing? Does that make sense? James Bond is one of them. Nobody expected James Bond to drink Heineken, and he's drinking Heineken, and quite naturally, actually. The other thing is our advertising. You know, we're one of the first that tried to move away from what I call the big fat beer jokes, and creating advertising which is unisex, which is complex, which has an artistic dimension that keeps the brand interesting. And there are other things that we're going to continue doing. One of the areas what we're doing to rejuvenate the franchise a lot is digital, where Heineken brand is actually leading in the digital world, where we're going to close to 10 million fans before the end of the year.
So what you're outlining here is the need to have a very strong marketing budget, and I wonder in these times whether your budget still looks like what it did a couple of years ago. Are you still getting the money or the funds from the board to spend?
Heineken is a brand building company, and brands are the lifeline of our growth and of our strategy. And this is one thing we will always preserve, which is investment behind our brands. Now, does that mean in order to keep our brands interesting and growing, do we have to escalate them? No, actually we've maintained our investment as a percentage of revenue quite stable, but we've chosen to invest differently in a more efficient and a more resonating way.
Well, we have a little bit of a party around the set here about 8:45 in the morning, but no Heineken on tap. Instead, we've got Alexis Nasard, who's the Chief Commercial Officer of Heineken, staying with us too. Simon Morn, Financial Sector Strategist at Olive Tree Securities, and Virginie Maisonneuve, who is the Head of Global and International Equities at Schroders, around the set. Simon, I wanted to pick up with you because we're just talking about beer and some of the marketing strategies. You had some thoughts you wanted to wade in with.
Yes, I mean, I'm very interested whether the growth markets have sales in licensed premises or they're largely home markets, because it makes a big difference with how you do your marketing spend. I mean, traditionally growing up looking at beer companies, you see beer advertised on the TV and think, oh great, I'll go for a beer. You go to the pub, but you drink the one that is in that pub, not the one you saw on the TV, and therefore the benefit of being the first mover in the market, as you mentioned Heineken was, is big for in-licensed premises if you've got the distribution. But if it's all about home sales and out of supermarkets, then you're much more open to new competitors coming in, new promotions, striking a better deal with the retailer. So I was curious to know where the growth is predominantly in your emerging markets in particular. Is it in supermarkets or is it in bars and restaurants?
In developed markets, it is more in supermarkets than in bars, because people, because of the recession, they tend to go out a little bit less. In the developing world, it's actually in both sectors. Both are growing, and we are intent to winning in both. But we need to remember that the role of each one is different. For example, when you go into a bar and you drink a beer, it's an experience. And our activation in these outlets needs to be all-encompassing. In the supermarkets, as you say, the challenge for us is of a different nature, which is bringing to life our marketing programs down to the aisle. For example, with our partnership with Tesco, we're trying to bring James Bond down to the aisle to be more competitive with other offerings, as opposed to being just a commodity offering amongst many other brands. We try to bring them to life at the point of purchase.
Just jumping in briefly, we've got a lot of data in the wires in terms of PMI figures as well. French October final manufacturing PMI rising to 43.7. That's up from a 41-month low of 42.7 in September. The new order sub-index rising to 40.3 from 39.6. Let's leave that aside now. Virginie, we were hearing about the developed market strategy, but also, of course, Heineken voraciously after, as indeed are SAB Miller and the rest of the brewers, after that Asian market as well. Is it paying off in your mind? Because it's a vicious scramble as well. They're all after the same market. They're all after this same emerging middle class that is part of the thematic which you think could be a major driver for these markets over coming years.
Yeah, I mean, as you know, one of my long-term themes has been super cycle, or the emerging market super cycle. Between now and 2050, we've got 3 billion new consumers coming on the planet that can spend about between $10 to $100 a day. Clearly, that's about $30 trillion of capacity to spend, and some of that will be spent on beers and cars, etc. To me, when I look at companies, is what is the specific strategy, what is the local brand name, sometimes building a local brand name as opposed to a foreign name, the distribution. If you think of China, the beer market in China is a very, very difficult market. Do you have partners, etc.?
In China?
Well, it's a very large market. You had a lot of local players. Love to hear your views, but also it's a market that foreigners have tried to enter quite early on, and it's a very large market, as you know.
Have you got it wrong at times in China?
China is a difficult market, to your point, for a very simple reason. It's a very low-priced market, which makes it more difficult to compete in. This is why we've chosen to follow a premium strategy that plays to our strength. So premium brands and premium and top cities. So a very urban approach. And by the way, urbanism is one of the largest megatrends in today's world that often passes below the radar screen.
Sure.
And Heineken brand, mind you, in the last quarter grew in China 50%. So our strategy is paying off.
But in the same way, Simon, that if you buy local Chinese stock markets, you have had a bloody nose over the last couple of years. If you're a European or a US corporate trying to take advantage of those longer-term thematics, again, the same risks are there, aren't they?
Oh, you're coming back to my favourite topic, the correlation. There is very limited correlation between GDP growth and actually stock market performance. And part of the reason for that is that you can get companies in China who can be powering along at the top line, but there's no cash flow. And that is one of the increasing features that we see with Chinese companies, that a lot of what is being funded at the sales line is being taken out of working capital, and as you get a more sophisticated investor base looking at this, they're saying, well, hang on a minute, this isn't all as it seems.
Well, exactly, and virtually that feeds into another thematic of yours, actually, that we're never going to get the consumption that people think we're going to get out of the emerging world on an equivalent basis as we're seeing in the West and in the United States. If we get the number of cars per household as we have in the US and Europe, in China, this planet's done. We don't have the resources for it as well. So I'm just wondering if too much growth expectation is being placed on the emerging market story.
Well, I think it's a give and take. So as you know, I've just written this paper on saturation, and I think, given climate change, demographics, and emerging market super cycle, impact of deleveraging from the crisis, etc., we are currently consuming 1.5 times the renewable resources that we have on the planet, and that's with 1.3 billion people living under the poverty line. Add the 30 trillion that I've talked about earlier on of consumption, and add at that point a 9 billion population by 2050 on the planet from 7 now, and assume that population wants to live to the American way of life, you will then be consuming 4.5 times the planet's resources. So it's absolutely not possible. There's an element of saturation. For me as an investor, I'm not a pessimist investor. I think innovation and focusing on sustainable growth is absolutely crucial. And I think innovation in everything, the way we manufacture beer, water, how you package it, the way we look at constructing chips. So if you look at a new product like graphene, for example, it's a very exciting area. It's a carbon-based, man-made substance that is 100 times stronger than steel. If you coat copper wires, for example, with it, creates resistance 100 times higher. It's very conducive, and people like Samsung, for example, are looking at it in terms of replacing chips. So it's not today, but the impact on resources in general, if you think construction, if you think water, etc., is enormous. So it's not absolute growth, it's how we accommodate 9 billion people on the planet.
We've got some key German data coming out as well. Sorry to interrupt.
The final PMI numbers for Germany, 46 is the number, so in contractionary territory still. It's a little bit lower than the flash number, which is 45.7, then also retreat away from the September final numbers of 47.4. So we are seeing the manufacturing sector shrink for the 8th month in a row. So the number's better than what we're seeing from the likes of France and also Spain, but nonetheless they are going backward. Guys, let's just pick up on this point we're having about saturation. It's interesting as you see a lot of older sectors move throughout, the cycle, your growth in beer volumes is still fairly tiny. It's single digits, and this is one of the issues. Can you ever move away from single-digit growth now from, for a market that is a mature market and get back to a high single-digit number at least?
It's clear that today the economic situation around the world is not helping our top-line growth, and that is reality. But when you look at the long-term prospects of the beer category, it is forecast to grow in the solid, mid-digits. So that gives us plenty of opportunity to grow down the road. Beyond that, we're going to think about top line in a more sophisticated way as we address different parts of the world, to the earlier point that I made. In some parts of the world, we're going to deliberately follow a very disciplined premium strategy so we can extract more value out of the volumes that we generate. In some parts of the world, we have to develop the market, like in Africa, where consumption of beer is still very, very low, and we have still opportunities to grow over there.
Perhaps you should think about serving some warm beer in China. I think that they like the beverages to be a little bit heated for the digestive system.
That's a thought.
There you go.
Well, we're going to leave it there. But thank you so much indeed for joining us.
Thank you.
All of you. Alexis Nasard, who is the Chief Commercial Officer at Heineken. Simon, nice to see you as well over the last hour. Thank you very much indeed for your thoughts. Simon Morn, Financial Sector Strategist at Olive Tree Securities, and Virginie Maisonneuve, who's been our guest host today, Head of Global and International Equities at Schroders.